There are no markets anymore. There are only interventions. What you see out there in the bond market, the stock market, is totally propped up. If they weren't keeping it propped up and if they weren't suppressing precious metal prices, the current financial system, including the stock market, bond market, would be a smoldering ruin within about 5 business days.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 22nd through July 29th, 2024, while supplies last. First, we feature backdated 1-ounce gold Canadian maples at the lowest price in years at just $65 over spot. Next, we have backdated gold 1/10-ounce eagles at $39 over melt per coin. We also have 2024 1-ounce Silver Britannia at $3.29 over spot. And finally, we're offering Dealer's Choice Constitutional Silver half dollars at $2.50 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're privileged to have this distinguished returning guest, Ed Steer, a longtime analyst of precious metals markets and an acquaintance for lifelong of Ted Butler. It joins us again this Wednesday, July 24th, 2024. Ed, thanks for coming back on Liberty and Finance.
Well, thanks for having me on again, Dunnigan.
We were very grateful for your first visit here, most recently, where we discussed our mutual friend and acquaintance, Ted Butler, and his legacy. And I'm so glad that you were able to join us to give us your perspective and your informed insights into the market. Our viewers would appreciate further insights from you at this time. And I think one of the things we're going to talk about, with your permission, is the ongoing action on both the gold and silver markets. Perhaps we can start with the U.S. and then you can, if there's any contrasts that are appropriate for you to draw between foreign precious metals markets versus the ones we're more familiar with. But if we can start here with what's going on in the precious metals markets in the U.S., one of the concerns that has been there for over a decade or more with our viewers is the repression or suppression of what would be more natural and free and fair markets for gold and silver. And you talked to us last time. You shared a chart analysis showing the heavily concentrated short positions affecting silver in particular, but not just silver. And would like an update from you in that regards. And then we can talk about what lies ahead based on the physical reality of where the metals are moving. So could you start us there with your current view of the gold and silver markets and I guess within the context of what you had talked to us about before of the heavily concentrated short positions?
Okay, well, since I spoke to you last night again, which is a month ago, absolutely nothing has changed in the on the COMEX. The 8 traders are still mega short gold and mega short silver. That hasn't changed at all, although I expect in tomorrow or Friday's COT report that there will be an improvement because the prices are down and silver is now below its 50-day moving average. But, in the paper markets, the 8 commercial traders are still heavily short these metals. And from that perspective, the markets remain very bearish. But on the other hand, if you look at the physical market every day, if you look at what's going on with the price, you can see that despite how negative it is from a commitment of traders report perspective, the precious metal prices want to rise. And today, Wednesday, is a typical example where both silver and gold and platinum and palladium were up big time. But then once the London market closed today, the New York boys in New York came along in the paper market, and they now have gold and silver down in the day by, gold, I think silver's down 23 cents right now, is up way more than that earlier. So, their attempts to keep people from rushing from paper assets to hard assets is still on in earnest, but slowly but surely, you can tell from the physical withdrawals, in gold and silver from the exchanges, or the amount that's being added, the amount that's moving around in and out and changing ownership, both overseas and home here in North America, that the demand, especially for physical silver, is absolutely off the charts. And that hasn't changed. And sooner or later, it will be reflected in the price. But at the moment, the powers that be don't want silver to rise. But one of these days, the physical market will overtake paper, and it won't make any difference what they do in the COMEX. And we'll see a brand new shiny price for silver at some point.
That's one of the things I wanted to zoom in on with you, and that is we've heard reports of record off-taking and physical deliveries, not only from the COMEX, but also from the LBMA and the Shanghai markets, and also methods of acquiring physical metals outside of these exchanges that has been going on. Repatriation of metals and purchasing by such players as India, etc. Can you talk to us about the physical metal balances and where those are moving and what that may indicate about the future, as you say, of the returning to free and fair markets if they become physically dominated rather than paper dominated, as they have been for quite some time here in the U.S.?
Well, a gold market is an entirely different animal than the silver market. I mean, everybody's aware of the fact that, the world central banks and the countries in general have been accumulating gold steadily over the last, 10 or 12 years. And that is ongoing. That has not stopped. China's, backed off buying gold for the last 2 or 3 months, but that's just the Bank of China that's reporting not buying gold. There are many other entities in China that are buying gold, but not reporting it on their books. There's far more gold being imported into China than actually being reported. But as far as the silver market goes, the Silver Institute has projected another 200 plus million ounce silver deficit again this year. I think it's like 215 to be exact. And the amount of physical silver that's being moved in and out of the exchanges, both at, as you mentioned in Shanghai or the LBMA or in the COMEX, is frantic. It's absolutely incandescent white hot, the amount of activity there's been going on here. This is, accelerated in the last 2 or 3 months. The big surprise that I reported on in my column the last couple of days is the fact that since July the 12th, there's been 26 plus million ounces of silver deposited in SLV. And you have to ask yourself this question, well, where did that 26 million ounces come from, considering the fact that the world is running a supply-demand deficit of 215 million ounces this year? And the answer is very simple. It's something that Ted came across back in 2011 when we had the drive-by shooting on May the 1st of that year. The week before that, both Ted and I noticed it at the time, is that J.P. Morgan opened their silver depository for the first time ever, or for the first time in 20 years or whatever. And when they hit the price on May the 1st and everybody started puking up the physical silver, they were accumulating it. And Ted's reckoning is that they accumulated over 1 billion ounces of silver between then and the time that the supply-demand deficit began to show up 4 years ago. And the amount of physical silver in the COMEX has been drained by quite a bit. In SLV, it's been drained by quite a bit. But that has now ended, and the sole supplier of silver into the deficit now are the stockpiles that J.P. Morgan has managed to accumulate since May 1st back on 2011. And up until, before Ted passed away, he'd mentioned several times that J.P. Morgan certainly has less than well under 500 million ounces of that silver left. So they've been providing the silver to feed the deficit for the last 4+ years out of their stockpiles in London. And the 26 million ounces that has showed up in SLV over the last couple of weeks, that had to come from J.P. Morgan stockpiles as well. So you can see, even though you can't see the silver being drained, it's actually has to come from someplace. And where it's coming from is J.P. Morgan stockpiles. And 26 million ounces of that disappeared into SLV yesterday. So the demand is absolutely off the charts. And there's no sign that that's going to change anytime soon. And like I said earlier, sooner or later, J.P. Morgan's largesse will end, or they're simply going to run out of silver. And sooner or later, that day will be upon us.
When the Chinese were reported to have paused in their rapid buying of gold over the past several quarters, and then suddenly in May and again in June appeared to have, at least from their official numbers reported by the People's Bank of China, have paused in acquiring gold, we heard of a delegation from major bullion banks in the West going to China to meet with them there. Is there any understanding from our side of what the point of that might have been, whether it was related to what you're describing as far as J.P. Morgan having to plunder its own stockpile to maintain the balance from showing up in terms of explosive rises in the silver price in the West?
Well, I'll tell you what, there's a lot of speculation on why these bullion banks suddenly appeared on the Shanghai Gold Exchange for a visit. And I don't pretend to know, and so I'm not going to speculate. The only thing I do know for sure is that none of the other major central banks in the world have a silver supply that they can provide to feed this deficit, and the only one left is J.P. Morgan. And the fact that the Shanghai Gold Exchange put their names up, saying, oh, by the way, these people have visited our vaults in the last month or so. I don't know if they were trolling them or not, but the fact that they showed up is very interesting. But whether it has anything to do with the silver market, I'm not prepared to speculate. I'll leave that to others.
The work that you do in analyzing the actions of the concentrated positions in the COMEX and other markets, the big picture that you're looking at, what is the major trend that you're looking at and that you're expecting to see some revelation over the next quarter or the next year that will either confirm or give you confirmation of what you're expecting to see there?
Well, as far as silver is concerned, the thing I'm looking at is the physical movements in and out of all the various exchanges, including the LBMA and the Shanghai Gold Exchange, the Shanghai Futures Exchange. I report on this in my column every day, and of course I watch the price. All we're doing now is waiting for the countdown for this silver shortage to finally manifest itself in its price. And right now, it's attempting to do that, like it did today, but the boys just aren't allowing it. And as far as the physical market is concerned, the other thing I'm watching is the paper market as well. Right now, the paper market in the COMEX controls the price of most major commodities, the four precious metals, copper, and West Texas Intermediate crude. And the paper price sets the price regardless of the supply demand fundamentals in anything. I'll just mention platinum and palladium for a bit here. I think both are now in their second year of a structural deficit. There's more being used than is being produced. And I think the Platinum Association, whatever they call themselves, announced this, 3 or 4 months ago, is that, that they're having to draw down stockpiles, the existing inventories to meet the demand for these metals. Copper is in the same boat. I think it was Don Freeland or whatever his name, that guy, that big copper player, came out and said that, the demand is going to be 3 or 4 times what we're producing right now. But that's not being allowed to be reflected in the price either. Matter of fact, copper is down about the last 8 or 10 days in a row. It has nothing to do with supply or demand. It has to do with what's going on in the paper market. So between what's going on in the COMEX and the paper market, what the big 8 commercial shorts are up to, and what's going on in the physical market are two entirely different things. You see this big dichotomy, and the fact that, I'll say it again, is that, the supply-demand fundamentals for a large number of commodities, of which silver is by far the most important, is not being allowed to reflect it in its price. But that will change someday. But what day, who the heck knows?
If we look at the opposite side of the coin, there's the physical economy, which has many ways of evidencing that it's struggling. We've got like 40% of the companies on the Russell 2000 that are considered zombie companies. They can't even afford and have enough earnings to pay the interest on their outstanding commercial loans, which, by the way, they're having to refinance those loans at higher interest rates, so that doesn't bode well for their future solvency. And the banks that loan to them also have toxic underwater bond portfolios. They have non-performing commercial loans. Many companies that have offices that are no longer needed because of people working from home, et cetera. They don't have these huge, expensive corporate towers and headquarters that they want to pay anymore. So some of them have non-recourse loans. They're walking away from them, leaving the banks holding the bag. And we've heard that even back when the major 3 bank failures happened last year in the U.S., including Silicon Valley Bank, the second, third, and fourth largest bank failures ever in the U.S., that there were hundreds. One study from an independent organization came out with over 280 other banks that were in a similar or worse situation to the 3 that were allowed to fail. Building up to all of this, in the face of all of that, there are analysts calling for huge risks in the banking sector, and that this is all just being ignored, and the stock market is just marching on forward because the headline indices of the stock market are dominated by just a very narrow handful of companies, the stocks. So it just seems almost the exact opposite story. You're saying commodities are on fire, these metals are, and silver in particular is on fire, white hot demand, insufficient, replacement supply for that and for copper, for platinum, palladium, et cetera. And yet all kinds of manipulations going on to keep the price down, whereas the physical economy and the companies that are represented and reflected in the major stock market indices in big trouble, the banks in big trouble, and yet a runaway, almost a melt-up event happening over there. Any comments on that dichotomy, and where have we seen this before? If history doesn't repeat, it rhymes. What happens usually when this sort of scenario plays out?
Well, the situation has started back in 1971 when Nixon took the world off what was left of the gold exchange standard at the time. And we've lived in a paper fiat currency market ever since. And, the powers that be, the world's banking systems, knew that at the time that this system was going to crash and burn. And at some point, because no fiat currencies, so which the whole world is on right now, have ever survived the test of time. And this system that we have today won't either. And what you're seeing is the major banks and the Federal Reserve and the other central banks of the world doing everything they can to keep everybody in paper, whether it be the bond market or the stock market or whatever, keep everybody on that side of the street. And they use it through derivatives, and their bank they rig the markets. I mean, there's no question about it. Everybody knows that the stock markets are being rigged higher, and everybody knows that commodities are being suppressed. So everything that wants to crash and burn, which is the paper market, which they would do in an instant if they weren't being propped up. And the hard assets would blow to the moon if they took their foot off the prices for even a couple of days. It would, the financial system as we know it is going to end someday, and it's going to end soon, but they're trying to keep this thing propped up and going around the track for as long as they can. And the whole thing is a financial, monetary train wreck that's going to come crashing down. And whether it's going to come crashing down as a result of market forces taking over and just happening, or the fact that the boys are actually going to crash the system and come up with a new one at some point. There's a lot of talk of that about the Great Reset. But I can tell you right now, the day the stock market melts down and commodities melt up, that will be enough of a Great Reset, where that, the end of the current financial system as we know it will be upon us, and what the powers that be have in store for us, we have yet to find out. But we're in the dying days of a financial system, a worldwide financial system that is about to come crashing down at some point.
Words of wisdom can you offer for people who are trying to decide how important it is to personally and physically have in their possession assets like physical precious metals versus just participating in price action through exchange traded funds and that sort of thing. Do you what trade-offs, what principles do you think of and do you talk about with people who are trying to make those decisions?
Well, the first thing I tell them is that you have to have physical metal in hand. That is the number one thing you should have, because it is not somebody else's liability. You hold it in your hand, you own it, and it's always going to be worth something. So that's the first thing I tell people. Take part of your money or all of it and put it, if whatever your risk tolerance level is. And most people's, when you start talking about precious metals and they've never been in it before, is not very high. So I just tell them, look, buy gold, buy physical gold, buy physical silver. Find some place to stash it where it'll be safe, and you'll be okay. But for the more adventuresome, I certainly recommend that they get into the equity markets to a certain extent. I know that I'm all in right now in the precious metals, both in the physical and in the equities, mostly silver. But I don't recommend that to anybody, by the way. But that's the way my portfolio is skewed. And I'm just sitting here waiting for this thing to all shake out, because sooner or later it will. But for people who are starting out, buy the physical metal first, and then if you feel like it, put something in the precious metal stocks. And if you're new to this, I do not recommend trying to rifle shoot this sector, like buying an individual stock. That's very dangerous. I recommend people buy a good mutual fund. A gold one in the U.S. would be Van Eck Junior Miners. I don't know what the ticker symbol for that is. And in silver space, in the U.S., it's SILJ. I know that one for sure because I do own it. And here in Canada, we have 9 Point Silver Equities Fund. But I recommend people get into shares in a certain way if they have the risk tolerance for it. And like I said, the best way to go about it is to buy a mutual fund, because there's no way I would bet the farm on one or two particular stocks, even no matter how much you love them. So that would be my recommendation to people.
Also, thoughts that you have had or that you share with people about holding physically what you own yourself versus having it stored in a vault, or a hybrid solution of both of the above?
Well, here that's a very personal thing too. I mean, you buy $100,000 worth of gold, you can put that in, that'll fit in the palm of your hand almost. And about $100,000 worth of silver is a lot of silver. And you have to decide, looking around at your own personal, if you've got $100,000 worth of silver, that's a fair amount of silver, and you've got to decide whether you want to store it at home, tuck it away, or whether you want a professional vault storage. It's a very personal choice, but once you get up into the significant amounts of silver, it doesn't make any sense to store it at home. But, if you're buying a few hundred ounces or whatever, I'm sure anybody can do a little midnight gardening, or, stick it someplace in the corner in the basement, or, and just don't tell anybody you own it. It's as simple as that. And nobody will be none the wiser. So I know most people store their silver stashes at home. That's just a fact.
What does history teach us about those who do own assets such as physical precious metals emerging from economic chaos? As you have described, all fiat currencies eventually fail. When that has happened in the past, how have those who prepared by owning physical precious metals, how have they emerged through those types of economic crises?
The only thing that's ever survived any kind of financial and economic crisis is something, a physical hard asset, whether it be gold, silver, platinum, palladium, copper, anything that the world requires to function is what you should own. The currencies themselves, all you have to do is look at Weimar Germany or Zimbabwe. I mean, everybody's seen the Zimbabwe $10 billion notes. I have a couple of those myself. Or Venezuela or Argentina or any other country that has debased its currency into the dirt. The U.S. dollar has already, lost 97% of its value since the Federal Reserve was formed back in 1913. Here in Canada, it's the same. It's no different. When I was a kid, it cost 5 cents to mail a first-class letter in Canada, and now it's $1.40. I know in the U.S. it's about $1.50. currency, it's not the price. It's not the prices going up. It's the currency being debased. And what the powers that be are trying to do is prevent that from showing up in gold and silver prices. But in the end, the only things that will be left standing are the precious metals, gold and silver in particular. And that's been the way it's been through all of recorded history, and nothing has changed in the last 2,000 or 3,000 years.
For people whose standard financial advice that they get from their retail personal financial advisors or financial planners, that sort of thing, is stay invested in the market, balanced portfolio, 60-40 stocks and bonds, and buy on the dips, and you always can expect the markets always come back, and let's see, you can expect about a 7% gain year over year on average over the long haul, that sort of thing. For people who've been following those basic rules of thumb for the past 40 years or so, it's played out fairly well. But things appear to have been changing over the past 3 or 4 years in particular, with interest rates rising and the stock market indices showing more volatility, et cetera. And even this year, the 10-year treasury has been more volatile than gold, for example. Any thoughts from you on people who maybe feel the way that you have described based on history, but are getting this input, this direction, this guidance to just ignore history, at least long-term history, and just focus on the next few decades should be like the last few decades?
Well, this reminds me of 1929, where they say prosperity is, going to last forever. Well, it doesn't last forever, and this has been going on. I've been at this for a very long time, and the markets, at one time that was the case. You could buy some bonds and buy some stocks and 7% return. But as you pointed out, the bond market has performed disastrously, and that's the last place you would want to be in an inflationary environment that is unfolding before us today. Because you're locking in your money at 3 or 4%, and inflation, of course, even though the government says it's, approaching 2% again, nobody believes that for a second, because it's just not true. So, the old mantra of investing part of your portfolio here and part of your portfolio there, that may have been true 2 years ago, but it's no longer true today. And my advice to people, if it was me, I would run screaming from the general stock market right now. I would be in cash rather than in anything paper, whether it be the stock, bond market, and I would be in precious metals. That's been my philosophy for quite a while now, and it's even more so now than it was even, say, 2 years ago. So that's my advice to people regarding the stock market and what their financial planners are telling them.
It's certainly the case that we're living in strange times. We've had a attempted presidential assassination in the U.S. within the last few weeks. We've had another sitting president withdraw from a re-election. There's been just roiling stories about a palace coup going on, or what's driving this, and yet the markets seem to be anticipating better climates if we get a regime change here, something that will be more friendly to the economy going forward. In your view, looking at the broad long-term view, do you think that the structural imbalances that you've described and the false narrative that's been propped up by forcing false markets will play out regardless of what these day-to-day political machinations go on? But do you feel that the structure is basically baked in the cake, and that's why you've taken a protective posture with owning real things rather than being involved, basically bought into the system?
There are no markets anymore. There are only interventions. What you see out there in the bond market, the stock market, is totally propped up. It is a Potemkin village of the first order of magnitude. Nothing is real. Like you pointed out, the zombie companies out there represent, 25 or 30% of all the companies. If the Fed wasn't keeping the paper markets propped up like the stock markets, which they are, if they weren't keeping them propped up, and if they weren't suppressing precious metal prices, which I've said before and I keep saying in my newsletter, if they allowed the markets to operate functionally and let true price discovery happen, the current financial system, including the stock market, bond market, would be a smoldering ruin within about 5 business days, and the prices of physical commodities would be at the moon. This is what they're desperately trying to prevent, and they tried to prevent it, I'm sure, because of what's going on in the U.S. right now, which is absolutely horrific. You watch what's going on. This would have tanked the stock market and driven gold prices to the moon, but the powers that be just aren't letting it, and I'm sure that they're going to try and keep this the train on the track until at least the presidential election in November. And once, if Trump does get elected, and it looks like he's going to be elected as president, then I can't see that the powers that be will, maintain the illusion of what's been going on. But the next 5-6 months in world politics in general and U.S. politics in particular are the wildest I've ever seen since the Kennedy assassination back in '63. Which I remember all too well.
As you look at the markets and as you look at the world, what are the key things? You've certainly mentioned to us the commitment of trader reports and concentrated positions. What are the key things that you're keeping an eye on that people who follow your work will be apprised of so that they can stay informed the way you are keeping yourself informed?
Well, the two things, that Ted drove into my brain over the last 15 or 20 years, because I've been following him that long, was the commitment of traders report, the short position held by the 8 largest traders, most of which are bullion banks. He followed it every week. I report on it in detail in my column every week. And the other thing he's looking at is the physical market. In silver, especially silver, where the manic in-out activity in silver, which I keep track of every day, not just in New York, but also in Shanghai and in Europe and places like that, through Nick Laird's charts, which, you commented on one before. These are the things that I keep, harping on every day, and the charts are there and the data's there every day, and people don't have to wonder what's going on because it's right there. But it's the COT report and the manic in-out activities in physical silver. And the fact that it's as manic as it is means that they're having a hard time getting a hold of all the physical metal they need, especially silver. And like I said, this is something I keep track of every day in my column.
If people want to follow your work very closely, how do they get connected?
Well, just Google my name, Ed Steer, S-T-E-E-R, Ed Steer Gold Silver, and my website will pop up. And there's a tab on there where you can see a sample column of my work and the detail that goes into it. And you can read that over. And if that's the sort of information you're interested in, well, you can sign up. And the freight is $100 US per year for about 260 columns per year.
Ed, we're grateful for your presence here with us. We are grateful also that you've agreed in principle to come back on a regular basis. And this is a good example of that, just to keep us aware of what we need to be, so that we're not just following the smoke and mirrors, but we know what's really going on in the physical markets. And that's extremely important to us, because our channel is populated by over 100,000 subscribers that want to know what's really going on rather than just what we're being told. So we really appreciate your being an important part of that. And thank you, as always, for joining us on Liberty and Finance.
And thanks for having me on, Dunnigan.
And folks, if you don't want to miss a single episode with Ed or any of our other guests, make sure that you're on our free mailing list. Make sure you go to libertyandfinance.com. That's our website. Just put in your email address there. Once you get to libertyandfinance.com, put in your email address, click submit, and make sure that you confirm on the confirming email, because you have to opt in. Once you're in, you'll get 1 email in your inbox per day with our latest interviews, including all of those with Ed. Ed, thank you for joining us, and look forward to our next visit together.
See you next time.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 22nd through July 29th, 2024, while supplies last. First, we feature backdated 1-ounce gold Canadian maples at the lowest price in years at just $65 over spot. Next, we have backdated gold 1/10-ounce eagles at $39 over melt per coin. We also have 2024 1-ounce Silver Britannia at $3.29 over spot. And finally, We're offering Dealer's Choice Constitutional Silver half dollars at $2.50 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.